Global markets are on high alert this week as critical economic data from the US, China, and Europe will shape investor sentiment and central bank policies. All eyes this week turn to Wednesday, March 11th, for the release of the United States February Consumer Price Index, or CPI. This critical inflation gauge, which registered a 2.4% year-over-year increase in January 2026, will be a major determinant of market sentiment and Federal Reserve policy. Investors are keenly anticipating these numbers, as any significant deviation could trigger immediate reactions across global equity and bond markets. The CPI data is a crucial barometer for assessing the ongoing fight against inflation and its potential impact on consumer spending power worldwide. The upcoming CPI release follows a period where inflation has shown signs of easing yet remains a persistent concern for central banks globally. In January 2026, the overall Consumer Price Index for all urban consumers saw a modest 0.2% increase on a seasonally adjusted basis. This came after a consistent effort by central banks, including the Federal Reserve, to curb rising prices through monetary policy tightening. However, energy costs and supply chain dynamics continue to exert upward pressure, creating a complex environment for policymakers aiming for price stability. This delicate balance has defined the economic narrative over the past year. Beyond inflation, this week offers crucial insights into global manufacturing health and investor confidence. On March 15th, markets will look to China's industrial production data for February. This follows recent news that China's Manufacturing Purchasing Managers Index, or PMI, fell to 49 in February, marking a second consecutive month of contraction and a decline from January's 49.3. A reading below 50 signals contraction, indicating weakened demand and production, partly due to the Spring Festival holiday. Furthermore, Europe's economic pulse will be gauged with the ZEW Economic Sentiment Index for March on March 17th, after February saw the euro area's sentiment decline to 39.4 from 40.8 in January 2026. The interplay of these economic indicators creates significant ripple effects across global trade and various industries. Weak manufacturing data from China could signal reduced demand for raw materials and components, impacting exporting nations. Meanwhile, persistent inflation in the U.S. might lead to continued higher interest rates, strengthening the dollar and making imports more expensive for other countries. For Europe, declining investor sentiment, as seen in the ZEW index, can dampen investment and consumption, posing challenges for trade within the bloc. This global economic interconnectedness means that no single data point exists in a vacuum, with each affecting the others in a complex web of influence. Analysts are closely divided on the precise implications of the upcoming data. While some anticipate a further cooling of U.S. inflation, others worry about underlying price pressures. For China, the focus remains on whether government stimulus measures can reverse the manufacturing slowdown. The European Central Bank's Governing Council also has monetary policy meetings scheduled for March 18 to 19, 2026. Ahead of this, the ZEW sentiment provides an important pre-read on economic expectations, influencing the ECB's rhetoric on future rate decisions. As ING analysts noted, the war in the Middle East is keeping a rate cut definitely off the table for the ECB's March meeting, and higher oil prices would lead to higher inflation in the Eurozone going forward. The coming week will be pivotal in shaping the global economic narrative, providing crucial data points that will guide investor strategies and central bank actions. The convergence of inflation figures, manufacturing activity, and shifting sentiment highlights a dynamic period where adaptability will be key for markets and policymakers alike. Look for ongoing geopolitical developments, particularly in the Middle East, to continue influencing energy prices and broader economic stability, adding another layer of complexity to the global outlook.
This is GeeseFinance.